Hello fellow traders. Today we'll break down the process to analyze any chart quickly without depth. We'll use AMD's chart as an example, focusing on two critical levels, 146.75 and 76.48. You'll leave with a repeatable adjustable workflow for technical analysis, which is essential for fast-moving markets and confident trading decisions. Today we're going to get into how to analyze any chart in 5 minutes or less by a pajama trader. Why fast structured chart analysis is essential. Markets move quickly and opportunities or risk can appear and vanish within minutes. Making data-driven decisions is crucial as it reduces emotional bias and guesswork. A structured process also enhances risk management by helping you quickly identify danger zones and optimal trading locations. Most importantly, this approach allows you to adapt confidently to changing market conditions, ensuring you stay ahead whether markets are volatile or calm. And let's talk about why process matters. Today's markets, speed is crucial. Hesitation can mean missing out or taking unnecessary losses. Think of a time when a stock moves sharply in minutes. Having a process lets you happen to act, not just react. Structured analysis removes emotion, lets you focus on facts, and helps you adapt to volatility. This isn't just for day traders. Investors also benefit by spotting long-term opportunities and risk early. If this video connects the dots with you, give it a like. Share this with other traders looking to edge up their trading. And consider subscribing for more Market Edge videos and alerts. Step 1. Multi-frame context. An effective chart analysis begins with the weekly and daily charts to establish dominant trend and major support or resistance zones. Once the broader context is clear, zoom in to intraday charts, such as a 5-minute or 15-minute view for tactical entries and exits. For AMD, 146.75 was a major resistance level on both daily and weekly charts, while 76.48 marks the 52-week low and a significant support area. Always begin with the bigger picture. Higher time frames show prevailing trends and help you avoid trading against the market momentum. For AMD, the long-term trend is up, but recent volatility means you need to check to see if it's still true on shorter time frames. Zooming in, we can help spot precise entry and exit points, essential for both swing and intraday traders. This step helps to prevent tunnel vision and keeps you aligned with the market direction. Step 2. Mark advanced support and resistance levels. Start identifying horizontal levels, such as 146.75 for resistance and 76.48 for support. Enhance your analysis by adding Fibonacci retracements from the recent swing from low to high, which helps confirm confluence zones. Use pivot points to spot intraday inflection areas and consult with the volume profile to determine where the most trading activity has occurred. For AMD, 146.75 is acted as the ceiling tested multiple times, while 76.48 is the floor where buyers have consistently stepped in. Next, identify where the price is likely to act. Mark obvious horizontal levels first. These are psychological barriers for traders. Layer in Fibonacci retracements and pivot points. If multiple tools highlight the same area, that level is likely to hold or break with force. And check with the volume profile. High volume at that level means institutions are very active there. Step 3. Assess the trend and momentum. Moving averages such as the 20, 50, and 200-day EMAs reveal the short, medium, and long-term trend direction and strength. The MACD indicator helps identify momentum shifts and crossovers, while the RSI flags overbought and oversold conditions, and can highlight divergence at key levels. For AMD, most moving averages are bullish, but at a neutral RSI, and recent volatility suggests the need for caution. Now to quantify the trend, are we in an uptrend, downtrend, or sideways? EMAs gives a quick visual if the price is above, the trend is up. MACD helps spot the momentum. Is it building or fading? A crossover near a key level can signal a breakout or reversal. The RSI tells you if the move is overextended. The divergence is when the price makes a new high, but the RSI doesn't, and can warn of a reversal. For AMD, most moving averages are bullish, but the neutral RSI is something to be looking for as a sign of caution. Step 4. Identify high probability patterns. So effective chart analysis begins with the weekly, daily charts to establish the dominant trend and major support and resistance zones. So on a broader context, just to make sure the trend is in line, you start with a year chart. Me, I like to use a year to 5-year chart. And then you zoom into a monthly, which I have a monthly 1-hour chart here. And then to really make sure that that's holding the trend, you move into a 1 to 5 minute chart, where in this case I have a 3-minute chart to really confirm where this trend is going. And pretty much with the multi-view is good for tactical entries and exits. So in AMD, for instance, 146.75 is major resistance. So pretty much we know that it is rejected at that point and is trending back. And we also know by looking at the longer term chart that support is at 75. So if it doesn't break this trend, we know that it's going to fade back down to these areas. Maybe not quite to 75, but probably to the 107 area. But by looking at the longer term chart, you have an idea of where it's going. At resistance levels like 146.75, look for double tops, bearish engulfing candles, or head and shoulders patterns. At support, such as 76.48, watch for double bottoms, bullish engulfing candles, or hammer formations. When the pattern aligns with the major level, it creates a high conviction trade setup. Patterns are most powerful when they appear at major levels. They are visual cues that the sentiment is shifting. For example, a double top at 146.75 tells us that buyers are struggling to push it higher. A bullish engulfing candle at 76.48 signals aggressive buying. Don't trade patterns in isolation. Always combine with trend levels and level context. This step is about stacking the odds in your favor. Step 5. Confirm with volume and overlays. Volume spikes can confirm institutional activity at key levels. Bollinger Bands can be monitored for squeezes or expansions at 146.75 or 76.48, which often precede major moves. The Ichimoku clouds adds another layer of trend and momentum confirmation, helping you to decide whether a breakout or reversal is likely to be sustained. Volume is the truth serum in the market. Price moves with conviction only when volume supports it. A breakout above 146.75 is far more trustworthy if it's accompanied by volume and a surge. Bollinger Bands help you spot the volatility shifts. A band squeezes often precedes big moves, and the Ichimoku cloud gives a quick read on trend and momentum. If the price is above the cloud, the trend is strong. Always wait for confirmation. Don't jump the gun on the first signal. The importance of this process. An in-depth, multi-perspective process improves accuracy of your decisions for price moves and trend changes. It also helps you define the stop loss and take profit zones to protect your capital. This workflow is adaptable across different markets and time frames and reduces emotional bias, fostering discipline and consistency in your trading. This workflow isn't just about speed, it's about building a reliable, repeatable edge. By combining multiple tools, you filter out the noise and focus on what matters. You'll know where to place your stops and targets, making risk management automatic. Whether you trade stocks, crypto, or Forex, this process helps you adapt to any chart, time frame, and, most importantly, it helps to keep you disciplined, removing the emotion and guesswork from the trading. Turning rapid analysis into confident action. Applying this process means starting with the multi-frame overview, marking critical levels, assessing trend and momentum, identifying patterns, and confirming your thesis with volume and overlays before acting with sound risk management. For AMD, a breakout above 146.75 with the volume surge could indicate a run to new highs, while a breakdown below 76.48 with bearish indicators signals risk of accelerated selling. If AMD remains range-bound between these levels, mean reversion trades could be effective. This approach increases accuracy, manages risk, and adapts to any market, and builds discipline. To master it, use these templates, set alerts, and practice pattern recognition, and stay flexible. What tools or techniques will you add to your 5-minute analysis? How do you balance speed and thoroughness? This process helps you analyze any chart, AMD or otherwise, in under 5 minutes with confidence and clarity. You'll know when to act, when to wait, and how to manage risk. No more guessing or chasing. Mastery comes from practice. Use templates and set alerts, and also work on pattern recognition. Now, how have you been getting by? What's your 5-minute reads? Let's keep the conversation going in the chat. Thanks again for watching.